Welcome to the Big Picture Retirement Show, where you'll learn what it really takes to have a successful retirement. With over 20 years of experience, your host, Rick Rivera of Safeguard Investment Advisory Group, has seen it all and is here to help you achieve your retirement dreams. This is the Big Picture Retirement Show.
Welcome into the Big Picture Retirement Show with Rick Rivera. I'm Mark Elliott. Glad you're with us. Rick is a partner at Safeguard Investment Advisory Group, has over 20 years of experience in the financial industry. You can find out more about Rick, Reed, Eddie, and the team at Safeguard Investment by going to their website, safeguardinvestment.com. Find out about events that are upcoming. Some are for clients only, some are for prospective clients, and some are just for educational purposes. Safeguardinvestment.com to learn more about the team. And you can always give them a call. There's no cost to ever chat with them. 800-700-1980. 800-700-1980. Rick, let's go back in time just a little bit. August 2nd, markets, Friday, 600-point drop. Monday, August 5th, 1,000-point drop in the markets. Everybody's freaking out. Is the recession here finally? Are we going to have another major crash like 2008 or the dot-com bubble bursting? What do you say to that?
Well, let's hope so. The reason why I say for that's going to pose opportunities for those of us that have proper planning. You know, a lot of these, I can't tell you how many times, Mark, that, the market drops 500 points, 1,000 points, whatever it is, and volatility in the markets. We've had this happen over and over and over again to almost nauseum. And every time the market goes down, every time there's volatility, it's always the same thing. You have people that panic. They want to run for the hills. They're concerned about their retirement. They're concerned about this, that, and the other. Then when the market rebounds, and then when the market comes back, they look back in time and say, oh, darn it, if I only knew, I wish I invested more, So, I've been doing this, Mark, over 2 decades, and I've seen countless scenarios like this. So, for me, obviously, because I'm in the industry, I'm probably a little bit desensitized to it. But the reason why I can be desensitized to it is because, our specific clients, they actually have a game plan. They have a strategy. And because they have a game plan, they have a strategy. And we know these things occur on a regular basis. If the market drops 1,000 points, 500 points, whatever it is, we plan for the worst case scenario. If it occurs, we know they're fine. I don't have to worry about the market continuing to run each and every day. So long story short, if you're asking me, am I concerned about these drops, these sudden drops in the market, long-term wise, not at all.
Yeah, you think about it. There's some terms that go with the market. A pullback, that's a 5 to 9% drop. Those typically happen about 3 times every year. The correction, that is a 10 to 19% drop in the markets. That happens every year or 2. The bears, the crashes, those are 20% or more drops in the market. Those are typically every 3 or 4 years. So I think that's what's always interesting to me. And you go back to 2008, and, Leno and Letterman would make fun, hey, your 401k is now a 201k. And people are like, I'm never going to be able to retire. And that's a big drop. When it goes 40 and 50%, that is no doubt a big drop. And if you're retired at that time and living only on, IRAs and 401k money that is really sensitive to the markets, then that's maybe a different issue. But when you have a plan in place, you've already talked to them about that, haven't you? I mean, you've kind of gone through, look, these things happen, 3% or 5% or 9% or 25%. They happen, and it's built into the plan, right?
Absolutely. And here's the big thing. Many times, markets are correct. And a lot of times, clients will get the, typical call from their broker, and they'll say, well, listen, it'll come back again. And the client's like, yeah, well, when's it going to come back again? And they're just like, well, just hang in there. And, that's not really a strategy. That's not really a plan. So what we do for our clients is since we know these things are going to occur, obviously any money that's in the market or in those type of investments are nothing that can affect our clients greatly over the long term. But what we do is we design the plan, we design the strategy, so that way when these downturns occur, because we have a game plan, we can actually leverage the downturn for our clients' favors. So that way now, well, let's say the market drops 1,000 points, or let's say it does, let's go back to COVID, March of 2020, market drops 30% in 1 month. Who could have predicted that? But when the market dropped 30% in 1 month, our clients, because of the strategy that we had for them, they were like, oh my gosh, this is opportunity. We can reallocate that portfolio and buy more shares at cheaper prices. Now we can get blue light specials and clearance sales on deals. Those that it made sense to do Roth conversions, we actually leverage the down market to be able do Roth conversions in a much more tax efficient manner. So, the list goes on and on. So there are things that are occurring during these down markets that we have to look at them as opportunities that we can now leverage going forward. And that is the big key thing, because they don't occur every day, but when they do, hey, how can I leverage this in my favor moving forward? And that's what it's all about. So you see it as opportunity, not as a negative. We actually see it as a positive.
Yeah, and you think about what Safeguard Investment Advisor Group does with the big picture blueprint. It's going to give you direction and clarity into your road to retirement: income, investment, taxes, healthcare, legacy planning, Social Security decisions, Medicare decisions. But this is a big part of it, because we do get a little spooked when things drop in the markets. Holy cow, there goes, I just lost $50,000. Well, you didn't really, because you hadn't cashed it in yet. And the idea is that eventually it will come back. But the idea is really about having a strategy. And that's what Rick and the team at Safeguard can really kind of put in place for you, because some people totally freak out when the markets drop 5 or 10%. Others never get bothered by it if it's 40% drop, because everybody looks at it a little bit differently. Rick and the team will sit down with you, kind of get your feelings about, hey, what if I lose 20%? That's not a big deal. Well, wait, you have $1 million. That's $200,000. Oh, well, wait, I can't lose that much. So it's all about how you look at it. And Rick and the team are here to hear the way you look at it and create the plan that you're comfortable with. It's 800-700-1980 to learn more, because it really is about you. That's how Rick and the team look at it. How can they help you feel less stressed? That would be a great thing. 800-700-1980. Because I think Warren Buffett said it: when others are greedy, be fearful. And when others are fearful, be greedy. Which means if the market's at peaks, then don't be buying in at that time if you can help it. But when the markets go down, that's a great opportunity to buy, which is what you're talking about, right?
Yeah, absolutely. And of course, Roth conversions and all the rest of it that we do. And then, of course, your interest in dividends being reinvested, buying you more shares at cheaper prices. But the other thing that we have to, take into consideration is obviously when designing a plan for a retiree. And you make a very good point, Mark. Somebody could say, hey, I can stomach, 20% loss, but then if they have $1 million, that's a $200,000 loss. They're like, oh my gosh, once they see the numbers, they're like, oh my God. Now, here's the thing. If we're putting every penny in the market, that could be a concern. But under that same situation, if we know that, hey, listen, you know what? We got enough money in the bank for emergencies. The income that we have coming in, regardless of market conditions, is secure. It's guaranteed for life. My everyday expenses are covered. And then whatever money we do have in the market is there to assist in the overall plan. Now we design that portion of it, which is designed to keep up with inflation, all the rest of it, based upon a client's risk tolerance. So just because let's go back to an extreme example, March of 2020, COVID, where the market dropped 30% in a month. Well, our portfolios are designed around our client's risk tolerance. So if a client tells me, hey, Rick, you know what, I can't stomach more than 10% volatility or 5% or 8%, we design it around you specifically. So if the market's down 30%, it doesn't mean that you're down 30%. Maybe that smaller portion of your portfolio is down 8 or 10 based upon your risk tolerance. So really, the way we want to look at these market investments is if the market drops, it's not going to devastate your retirement or your income or any of your what's most important to you moving forward. We design it in a way so that way, whatever happens in the market, it's enhancing whatever it is that you're doing and not taking away from what it is you're trying to accomplish in retirement. And that is very specific, and it has to be very strategic. And that is what we specialize in, Mark.
You don't tell people, hey, go watch the news. Go watch the financial channels as they tell you, you better do this or do that. And because we really want to panic. That's the
Well,
idea.
yeah, yeah.
We
As long,
don't want that. Yeah.
yeah, watch it as long as you got plenty of Xanax sitting around, or alcohol, and watch the news all day. But just know, while everybody else is panicking, because you have a plan, because you have a strategy, and you actually understand that plan backwards and forwards, let everybody else panic, and you're fine. And that's the key to all this, is making sure that you know what the strategy is. And that way, when these things occur, you're like, oh, no big deal. As a matter of fact, we talked about this, and I know exactly how this market decline is going to be leveraged in my favor moving forward.
Yeah, and I think that's really one of the keys, is that when you sit down, and we've talked about this before, but I think if you think of all the Fortune 500 companies, they all have a chief financial officer, right? Somebody to help guide them with their money and the decisions they make. That's what Rick and the team at Safeguard Investment Advisory Group can be for you, kind of your CFO, to help you when things get a little tricky and you're not really sure what you should be doing. They're here to help guide you, and I think really ease your stress level, which is super important. As we get older, stress is not the best thing for our health. And we all know the cost of healthcare is not going down anytime soon. So it's really about kind of that peace of mind, if you will, where we know where we are. We know that this could happen or that could happen, and it's just life, right? Things happen. We plan, and God laughs at us. But that's the idea. Rick and the team are here putting that big picture blueprint in place for you, with your risk parameters and all that stuff taken into account. It is all about you. It's 800-700-1980. There's no cost for this whatsoever. 800-700-1980. And Rick always says, if you give him 45 minutes, you come in and have a conversation, he guarantees that he will give you 2 ideas that will enhance whatever it is you are currently doing. Wouldn't that be nice to know, especially if you get a little nervous about the markets when they start dropping a little bit? They get a little bit volatile and we get a little nervous. This is your opportunity to kind of ease that stress. 800-700-1980. Back with more of the Big Picture Retirement Show with Rick Rivera of Safeguard Investment Advisory Group right after this.
You're listening to the Big Picture Retirement Show with Rick Rivera. For more information about Rick and the Safeguard Investment Advisory Group team, go to safeguardinvestment.com. While you're there, you can also download educational retirement guides and sign up for an upcoming seminar. That's safeguardinvestment.com. Now, back to the podcast.
Welcome back to the Big Picture Retirement Show with Rick Rivera of Safeguard Investment Advisory Group. Rick, Eddie Soda, Reed Abedine, they're the partners at Safeguard Investment Advisory Group. Rick has over 20 years of experience, and they're really here to help guide you with the decisions you have to make in the income, right? Where's our paychecks going to come from when we're retired? IRAs, 401ks, you're lucky enough to have a pension. Where's our income going to come from? Do we have enough guaranteed income to cover our daily bills? And then do we have enough income to go do the fun things we've always dreamed of? Investments, too much risk, not enough risk, the right amount of risk. Everybody's situation is unique. Taxes, we know taxes are probably going up, over $35 trillion in debt as a nation. The economy is kind of wonky at times. What's your strategy there? What about health care and long-term care, legacy planning, Social Security decisions, Medicare decisions? It's all part of the big picture blueprint. Rick and the team would love to sit down with you and have a conversation, maybe answer some of those questions and concerns you may have. 800-700-1980, 800-700-1980. I'm Mark Elliott. Glad you're with us. We're talking about the recent volatility in the market. And, it seems like every election year, presidential election year, the markets typically will start off a little bumpy early on. Second quarter, they tend to do really well. Third quarter, they might get a little bumpy again. Then the election happens and everything kind of calms down because the markets now know what's going to happen in theory for the next 4 years. That's kind of how the markets work every election year, isn't it?
Yeah, you know what? The one thing that markets don't like is uncertainty. So you're absolutely right. Before an election, depending on how the polls are going and this and that and the other, we tend to have, volatility of the market. We always expect volatility in the market prior to an election. And then after the election, that's when the markets start to stabilize. And, somebody might say, well, which, is better, administrative wise or whatever, what party. At the end of the day, again, the markets do not like uncertainty. So regardless of what party ends up in office, at least the reason why the market stabilized, because now they know, okay, these are the cards that were dealt, and now they know how to play those cards. So regardless of what party ends up in office, Now we know what we're dealing with. And now we know, okay, based upon this scenario, this is what we need to do, or here's what they're planning on doing. So, maybe one party plans on raising taxes, one party plans on reducing taxes, whatever the case may be. But again, where the stability comes in is once they know, okay, here are the cards we're dealt. Now this is how we play them. So until the election, I do expect volatility here and there for sure.
Yeah, and at the end of the day, it is proven that it really doesn't matter Republican or Democrat. It's the markets are always pretty similar the year after that election happens. It's typically a pretty calming time because markets know what's going on, kind of the direction the country will be headed. They think, and so it is interesting. But do you have people that are like, holy cow, Rick, the markets just dropped 5%. I got to get out. I got to go to cash. And certainly '08, we saw that. It's really interesting, I think, the psychology of the clients you have, because they're all different. But you go back to '08, the 401ks became 201ks. I'm never going to be able to retire. Fast forward to 2020, it's COVID. Holy cow, I don't know if I have any time left. I better retire right now. I mean, we are emotional, and we do make emotional decisions, which is where the plan comes in to hopefully give us some stability. Do you buy
And
that?
that's where the education comes in. So literally, it might be better if I kind of give you an example, and I give example to a lot of people when they come in to see me. We get a lot of Kaiser employees, and one time I had a nurse come in to me, and she was getting ready to retire. The market was peaking. Now, keep in mind, with Kaiser, their 401k plans. Kaiser, they have them invest in like Vanguard funds, so maybe they have a choice of like 18 different Vanguard funds, something of that nature. So contributing to her 401k over 30 years, of course, that built up to quite a significant amount of money. And she was getting ready to retire. And she goes to me, she's like, Rick, you know what? I'm having deja vu. I go, what do you mean? She goes, I remember back in 2007, some of my colleagues in my department retired. And then in '08, '09, after what happened, some of them came back to work again. And she goes, I'm getting ready to retire. Now, she was going to need to use that 401k, the money that was in the market, to offset her income. So she's saying, listen, the market's peaking right now. I'm getting ready to retire. And I feel like the market's just waiting for me to retire so it can correct. So she was
Right.
having a lot of anxiety,
Right. Right.
over it. So, long story short, what we did is we created a plan for her that allowed her to reduce the exposure that she had into in the market dramatically. We didn't get rid of the market at all, but completely. We left some money in the market because we do need the money to keep up with inflation. We designed the portfolio so her income would last the rest of her life, regardless of what happened in the market, because she did not want to go back to work for Kaiser. And we made sure she had enough money for emergencies and things like that. We showed her the strategy on how these different buckets work together. And because of the way she was deriving her income, we had her in a very low tax bracket. So she was a perfect Roth conversion candidate. So, long story short, we went over the plan with her, educated her, made sure she was knowledgeable on the plan. So, at the end of it, I wanted to role play with her because I wanted to make sure she was comfortable because she was feeling all this anxiety prior. So, what I did is I said, okay, I laid out the plan and I say, okay, now let's say the market corrects. Do you need to panic? And she goes to me, she's like, Rick, no, I don't need to panic because, I got my income's coming from this source. So that's not going to affect my income. I had the emergency. I go, yeah, but the market is going down over here. You're losing money over here. I wanted to be really extreme about it. And she goes, but no, that's the best time for us to buy more shares at cheaper prices. We can do our Roth conversions. That's the best time for us to do Roth conversions. I go, so at that point, she was actually thinking strategically. And I go to her, you know what this allows you to be? She's all, what? I go, a more disciplined investor. Because I asked her, I said, listen, what if I left all the money in the market? What would you have told me? She goes, oh, I would have told you to sell everything. And I did see people do that in '08 where they sold everything out of the market and maybe went into CDs and things of that nature. And guess what they missed out? '08 or '09 going forward, over 300% return to the market. So this is where we have to create a balance. And this is what we specialize in, Mark.
Absolutely. Let's finish with this. We got about 2.5 minutes to go. And you think about it. I mean, when you're putting a plan together, and maybe when they come in, they're working, right? So maybe it's not unusual for somebody to have 90% of their money at risk in IRAs and in 401ks, for example. When they retire, some will leave that risk the same because they're comfortable with that. Others will go, wait a minute, I need some safe money. Maybe that's 50-50, 50 at risk, 50 safe, or 30-70, or 70-30, right? Everybody's situation is unique, but that's kind of the idea, is that it's not all at risk. Once we get into retirement, there's other strategies involved in this.
Absolutely. And here's the scenario. When we're designing the plan, a lot of clients are like, well, listen, Rick, I need to make sure, my income is locked up for life. I also need to make sure that if, God forbid, one spouse predeceases the other, we're going to lose one of those Social Security checks. Sometimes the pensions get cut. How do we make up that shortfall for the surviving spouse and at the same time allow us to get incremental raises over time to offset inflation? Oh, and by the way, I'd like to do things tax efficiently. And of course, I want to get a fair rate of return. I understand, hey, listen, I don't need to be taking a bunch of risk in retirement, but I want to get a fair rate of return, keep up with inflation, and minimize risks as much as possible. And maybe they have other goals on top of it. So here's the thing. Not one investment can do all these different things. And the market, the money that's in the market is not designed to create all those different things. So what we do here at Safeguard Investment Advisory Group, we create a plan and we use the appropriate tools, the appropriate products to build this out for you. So it's not one investment that can do it all. If there was one investment that can accomplish all these goals at the same time, I'd have a line out my door. So if you have questions about any of these things and you'd like to know about these different strategies based upon your particular situation, give us a call toll-free 800-700-1980. Again, our toll-free number is 800-700-1980. And if you call today, I'll be happy to offer you an hour of my time. Leave your checkbooks and all that behind. I've been doing this long enough that if you let me ask you some questions, I'll be able to give you at least 2 ideas that will enhance whatever it is you've been able to accomplish, and it'll cost you not a penny to do. So again, that number is 800-700-1980.
Firm offers insurance services. Safeguard Investment Advisory Group, LLC is a registered investment advisory firm. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. Safeguard Investment Advisory Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by Safeguard Investment Advisory Group, LLC.